Hello everybody, this will be a new approach of how to trade with Market Cipher B. I like to use volume to kind of back up and incorporate it into my trading. So if you guys learned something new from this video, make sure to give me a thumbs up and subscribe. Plus, feel free to check out my other Market Cipher videos. I'll be leaving this in a Market Cipher how-to playlist, so feel free to check out my other videos along with that. And so in this example, I'm going to be using the 6-minute time frame just as an example of using this strategy. There are plenty of other time frames that work very well with this, especially when you're trading just divergences. And so typically the 24-minute, the 1 hour, and the 4 hour work best for divergences. I highly recommend using the 24-minute divergences, as those can be very, very profitable, especially for beginners. But anyways, let's get into it. What the indicators I am using is, of course, Market Cipher B, as you can see on the bottom of my screen right here. And then I added the regular volume indicator. Again, no settings whatsoever. I did change my candle colors to blue and purple. So in this example, blue candles represent a green candle and a purplish candle represent a red candle. And so what you want to be looking for is your regular divergences. So again, right here, we had a bullish divergence where the price was making a lower low. As we can see on Market Cipher B right here, price or momentum was coming up. And so if I open up my screen a little bit more, you guys can see momentum coming up. And then the second thing you want to look for as an extra confirmation is volume. So you want to see a volume increase. And so you can see on the screen right here is just volume. And volume, again, as a simple terms, is the amount of buying and selling orders. And typically when you're looking for a bullish divergence, you want to see a large amount of buying volume. And so if we come to this example, I'll go to replay mode and just kind of go over this example as like a live trading. So again, we can see a bullish divergence forming. And if we look at volume, we can see a large increase in buying volume. You can see the blue candle, large spike in buying volume. If we just take a trend line and look at the amount of volume, you can see a large increase in buying volume. And so if we do end up taking this a little bit forward, boom, our divergence kind of confirmed. And what do you see? You see large amounts of buying volume, large amounts of blue volume. And so typically this can be a good sign that buyers are interested in this level. So you guys can enter into this trade and get into some pretty good profits using this. So again, just adding volume, it's a free indicator as extra confirmation can make you win a lot more trades and just make sure you become more profitable. So I'm just going to exit out of replay mode and I'm going to go through some more examples. Here's a good example of another bullish divergence based off of the 6-minute time frame. Again, we had price making lower lows as momentum was coming up and making higher lows. And again, we saw a large increase in volume. Typically, you saw more buying volume than selling volume. And so again, this made for a very decent scalp. You guys could have gotten a nice 10% move based off of this. And so again, just looking at volume as an extra confirmation, you want to see large amounts of volume with those divergences. And therefore, you guys can get in a pretty good move. And it will just kind of have your back as many more buyers, or in this case, buyers, are buying with you, so you guys have a good cushion of support of other traders buying along with you. And I'll show you just one more long example of just in action. So again, price is making lower lows, momentum is coming up, and we see a very good large increase in volume. And so this would have been a very nice move. Again, just using volume as an indication, as a secondary indicator, can represent and kind of have your back of those moves and divergences. And so I'll show you an example of kind of when volume kind of goes bad and you don't really want to enter into that divergence. And so here, It's not really much of a bullish divergence, but we do have price making lower lows as momentum is coming up, as you can see on Market Cipher B. However, you see a kind of a short amount of volume coming in, and then you see a large spike of selling volume. And so this would kind of make you worry of the move, and really you don't really want to enter here, as there is a ton of sellers coming in outweighing the buyers. Therefore, you guys would have lost this trade. And yeah, it would have been like a negative 4% move. So again, just by looking at volume, you can have a confirmation of whether it is going to be backed by traders or not. Finally, I'll show you some short examples. I just moved to the 12-minute time frame. Typically, the 12-minute is really good with finding divergences as well. And so, again, we had a bearish divergence where we had price making higher highs, and our momentum was coming down on Market Cipher B. Money flow was also kind of coming down. And again, if we just looked at volume, you can see volume was kind of plateauing, like so. It was flat for a while in this move. And then suddenly we saw a large increase in sellers in this candle too. And so again, you guys could have entered a short trade and just kind of ridden this down for a nice 8% move. So again, just by looking at simply volume and making sure other traders kind of have your back as a cushion, it can lead to a very good winning and profitable trade. Here is another really good example of a short. Again, we had momentum coming down as price was kind of making higher highs. And again, we look at volume, and we can see that volume is kind of decreasing, plateauing. And then suddenly, as we have these red dots confirming, and so you can see it on the second red dot right here, that we had a relatively increase in volume as price just kind of broke out of that trend line of plateauing volume. And again, we had a very, very nice drop down suddenly based off of that. And so if you would have entered on the confirmation of this green dot right here, you would have entered right here. And here you would have had a pretty good scalp of 1.5% roughly. And lastly, one more short example. Again, we had price making higher highs as our momentum was coming down, making lower lows. Also, you saw a large increase in volume, and out of those volume candles, you can see more of the red candles, so meaning sellers are kind of more in control of this move. And again, you guys would have entered based off of probably this candle. And so either way, you guys would have had a nice 2% scalp. So again, just using volume as an indicator or an extra confirmation and backup, along with trading divergences on Market Cipher B, can be a very good indicator. Just having an extra layer of cushion, as many other traders who are trading will kind of have your back and be trading along with you. Typically with volume 2 is that it is large traders typically entering on these large volume increases. And so typically, as a good rule of thumb, you want to be trading with those large players and just kind of doing what they are doing. And so that is pretty much it for the video. Again, just look at volume, make sure volume just kind of has your back along with the divergence. There are times where you can just kind of front run the divergence if volume is spiking or increasing in the direction you want to. And again, you want to see green buying volume for bullish divergences, and then red selling volume increase in it for bearish divergences. So I hope this video has helped you guys a lot, and it is just a new approach of just kind of looking at Market Cipher B and trading divergences with volume as an extra confirmation. So make sure to like and subscribe. Plus, I'll leave this in a playlist called Learning Market Cipher. So feel free to check out that playlist as well for more helpful videos on learning Market Cipher. Thanks. Bye.